China is feeling uneasy and it's cautioning its citizens against traveling to United States to avoid unnecessary questioning. And in response, the United States is warning its own citizens about traveling to China due to concern about unfair treatment by Chinese authorities. Now, there have been recent cases of Americans facing serious changes in China, raising worries about how Chinese laws are enforced. Because China's laws are targeting the foreigners, including those related to spying and criticism of the government, and are making Americans anxious. Similar warnings have been issued for Hong Kong and Macau, indicating broader concern beyond mainland China. And the tensions between the US and the China, we'll see that, are already high because of the dispute over trade, technology, Taiwan and human rights. So recent warnings are adding on to these tensions. Cases of foreigners, including Americans, being detained in China without clear explanation of charges that raise concern about the fairness of China's legal systems. Experts believe that now India could gain from these problems between US and China in their trade war. This is because some companies are moving their factories out of China to avoid paying higher taxes on their goods. Countries like Vietnam in Southeast Asia, they have already been benefited from the situation, and India can also win in the same shift of manufacturing. India might sell more goods to other countries, especially the US, since the US has put some tax on some Chinese goods. Radhika Rao, an economist from the DBS group in Singapore, she says that India could almost attract the companies that want to invest in places other than China. And these tensions between the two economic giants are creating a new opportunity for India. But to make the most of this opportunity, India needs to change some of its rules about land and workers, because new opportunities that are emerging for India is indicating the potential for growth and development in various sectors. So this suggests that India may have the chance to explore new avenues for economic advancement, potentially leading to increased prosperity and progress for the country. Let me tell you in detail. Relocating of companies. US tariffs are expected to push foreign invested companies to move from China to other countries. This could lead some considering relocating to India, especially with the recent Make in India initiative. Reduced capital flow. The rivalry between China and the US may lead to protectionist measures affecting the overall flow of the capital. This could impact global financial market. Opportunity for India. The US-China rivalry offers India a chance to boost its competitiveness, particularly in sectors like textile, garments and gems and jewelry, where India already has a strength. Rupee depreciation. With a reduced capital flow, the rupee may depreciate further. While this could increase import cost, it could make Indian export more competitive internationally. Economic growth. Disruption in the current global economic order could affect India's export and import, which is going to have an impact in the economic growth with inflation. A decrease in supply of finished goods and raw materials could raise consumer price, leading to inflation. And additionally, consumers may face increased tax due to the tariff. Indian stock market. Indian stock market may see declines due to the investor cautions. And there may also be a decrease in the foreign investment inflow. So as companies relocate manufacturing operations and seek alternative investment destination, India stands to benefit. Yet to fully capitalize on these prospects, India must address regulatory hurdles and prepare for a potential economic impact. While uncertainties loom, India has a chance to bolster its position on the global stage and drive economic growth in the face of evolving geopolitical dynamics.